Let's bring in VanEck, the CEO of VanEck Associates. The firm has $69 billion in assets under management. Jan, happy Friday. Before I get to gold, I want to ask a broader question. You were already expecting a sideways market for 2023. With all of this bank's uncertainty, do you expect it to be down? And do you still think it's a 40-60 year where investors should be weighted 60% toward bonds and fixed income?
I think so, John. I think the narrative is obviously a little bit more complicated than that. And what I see is in this sort of year where the level of the water in the bathtub is going to be flat, there have been some infusions of liquidity into the market. One was at year end from Asia, China money supply, and Japanese bond buying. And that's what led to the January spike in tech stocks and everything. And then I do think that the Fed sort of stimulation here, or support of banks, I should say, will also be a short-term putting money into the bathtub. But long-term, I don't think those are sustainable or long-term investable kinds of things. And at the end of the year, the water in the bathtub will be the same. It'll be a sideways year. And I think, yeah, you'll be pretty happy with your bond positions.
Okay, now gold. It's had a nice run. At these levels, is it an investment or just a trade that's temporary with maybe some more upside?
I think we're at the very beginnings of what could be a several-year cycle in gold, and I also put Bitcoin in that category as well. I mean, you have to love, finally, as a gold investor, you've been rewarded over the last couple of weeks, right? Weakness in the banking system and gold rally. That's why you own gold. The reason I think it could be a 2-year cycle is because I think that Fed is close to the end of their tightening. The market is worried now about the consequences, and it could take a year or more for those consequences to roll through the commercial real estate market, right? The banking and lending dynamics. Maybe we have a shallow recession, but at some point, the Fed's going to start easing. And that's when gold's really going to party. You have some short-term things like gold floating with $2,000 an ounce. That got hopes going in the gold community as well.
Yeah, and of course, when you see interest rates go lower, when you see the dollar weaken, that's really good for something like gold, too. I thought it was interesting you just mentioned Bitcoin, because we have seen this rally in Bitcoin. And I know you have a couple of ETFs that are focused on crypto to a certain degree. So do you see it moving for the same reasons that gold is moving, or is there more at play here?
No, I think it's that simple. I think all the speculation is out of both of those markets. There's obviously no leverage in the Bitcoin market with all the regulatory crackdown and all the crises that we've had over the last year or so. So it's up like 70% on the year, best performing asset. Again, rewarding the people that own Bitcoin for that thesis of wanting a hedge in their portfolios.
So how do you trust it from here? I mean, Bitcoin has been, crypto has been so volatile. It was an inflation hedge, and then it was a risk asset. And now it sounds like you're saying it's back to being perhaps digital gold. Why?
Well, I call Bitcoin like an 8-year-old child. It's very, very early in the stages of adoption. Either there's so many, institutional investors haven't really gotten involved. Central banks haven't gotten involved. I think that's all possible over the next several years. So if you look at short-term performance, I mean, Bitcoin was less volatile than the NASDAQ at the end of the year. So if you take any short-term time period, who really knows? But the way I put it, this is, if you want to have this in your portfolio as a hedge, it's pound the table time, meaning you're not going to get a big flare. The starting gun's not going to go off. But at some point, the Fed will start this easing cycle, and you will want this in your portfolio. Short term, there might be pullbacks, and it might be a sideways year for this asset as well. But I do think, when the cycle turns, it could be pretty exciting.